Ethical and professional standards. I professionalism. 1 knowledge of the law. 1 bio independence and objectivity. 1 co misrepresentation. 1 misconduct. The integrity of capital market. 11 material non-public information. 11 bio market manipulation. UI duties to clients. 5 loyalty, prudence, and care. Bio fair dealing. CO suitability. Bio performance presentation. Bio preservation of confidentiality. If duties to employers. If the loyalty. If bio additional compensation arrangements. If CO responsibilities of supervisors. The investment analysis, recommendations, and actions. View diligence on reasonable basis. View communication with clients and prospective clients. View record retention. By conflicts of interest. Vio disclosure of conflicts. Vio priority of transactions. Vio referral fees. Vio responsibilities as a co-institute member or co-candidate. Vio conduct as participants in co-institute programs. Vio reference to co-institute, the CAW designation, and the CAW program. Global Investment Performance Standards. Definition of a firm, a corporation, subsidiary, or division held out to clients as a business entity. All fee-paying discretionary portfolios must be included in at least 1 composite. Verification optional, but if chosen it must be carried out by an independent third party. GIPS standards for firm S. 1. Fundamentals of compliance. 2. Input data and calculation methodology. 3. Composite and pooled fund maintenance. 4. Composite time-weighted return report. 5. Composite money-weighted return report. 6. Pooled fund time-weighted return report. 7. Pooled fund money-weighted return report. 8. GIPS advertising guidelines. Quantitative methods. Financial statement analysis. Revenue recognition. 2 requirements on a completion of earnings process and to a reasonable assurance of payment. 5-step revenue recognition model. 1. Identify contracts. 2. Identify performance obligations. 3. Determine transaction price. 4. Allocate price to obligations. 5. Recognize when ASO obligations are satisfied. Unusual or infrequent items. Gains losses from disposal of a business segment. Gains losses from sale of assets or investments in subsidiaries. Provisions for environmental remediation. Impairments, write-offs, write-downs, and restructuring costs. Integration expenses associated with businesses recently acquired. Discontinued operations. To be accounted for as a discontinued operation. Business assets, operations, investing, financing. Activities must be physically operationally distinct from rest of firm. Income losses are reported net of tax or net income from continuing operations. Compute cash flows from operations. A CFO. Direct methods start with cash collections. A cash equivalent of sales with cash, and pets a cash equivalent of sold a cash. Operating expenses a cash. Interest expense a cash. Taxes. Indirect methods start with net income, subtracting back gains, adding back losses resulting from financing or investment cash flows, adding back all non-cash charges, and adding and subtracting asset and liability accounts that result from operations. Free cash flow. Free cash flow effect measures cash available for discretionary purposes. It is equal to operating cash flow less net capital expenditures. Critical ratios. Common size financial statement analysis. Common size balance sheet expresses all balance sheet accounts as a percentage of total assets. Common size income statement expresses all income statement items as a percentage of sales. Common size cash flow statement expresses each line item as a percentage of total cash inflows, outflows, or as a percentage of net revenue. Horizontal common size financial statement analysis expresses each line item relative to its value in a common base period. Basic and diluted EPS. Basic EPS calculation does not consider effects of any dilutive securities in computation of EPS. Net income of preferred dividends. Basic EPS. TUD of no of common shares outstanding. Income available for common shares. Diluted EPS. TUD of common shares plus potential common shares outstanding. Therefore, diluted EPS is net D income div convertible preferred dividends convertible debt interest 0 TUD shares from shares of she's conversion of conv the she's conversion conv debt. Issuable from stock options, long-lived assets capitalizing vs. expensing. Capitalizing lowers income variability and increases near-term profits. Increase assets, equity. Expensing opposite effect. Revaluation of long-lived assets. Differs a revaluation gain recognized in net income only to the extent it reverses previously recognized impairment loss of further gains recognized in equity as revaluation surplus. For investment property, all gains and losses from marking to fair value are recognized as income. U.S. GAAP revaluation is not permitted. Deferred taxes. Created when taxable income on tax return at pre-tax income on financial statements due to temporary differences. Deferred tax liabilities are created when taxable income, pre-tax income. Treat debt as equity if not expected to reverse. Deferred tax assets are created when taxable income, pre-tax income, must recognize valuation allowance if more likely than not that DAW will not be realized. Long-term liabilities. Premium bond coupon rate, market rate at issuance. Discount bond coupon rate, market rate at issuance. Interest expense equals book value at the beginning of the year multiplied by the market rate of interest at the time the bonds were issued. Leases. Lessee reporting under IFRS. Lessee recognizes asset and liability equal to PV of lease payments. Interest portion of each payment is interest expense. Principal portion decreases liability. U.S. GAAP is same except that for an operating lease, entire lease payment is an expense. Lessor reporting. Finance lease or remove asset from balance sheet. Recognize lease receivable asset. Report interest income. Lessor reporting. Operating lease keep asset on balance sheet. Report lease payments as income. Record depreciation expense. Pensions. Defined contribution on employer contribution. Expensed in period incurred. Defined benefit of overfunded plan recognized as asset. Underfunded plan recognized as liability. Portfolio management. Investment policy statement. Investment objectives. Return objectives. Risk tolerance. Constraints. Liquidity needs. Time horizon. Tax concerns. Legal and regulatory factors. Unique circumstances. Combining preferences with the optimal set of portfolios. Markowitz efficient frontier is the set of portfolios that have highest return for given level of risk. Fixed income. Basic features of bonds. Issuer. Household, non-financial corporations, governments, financial institutions. Maturity. Money market a 1 year or less of capital. Market a greater than 1 year. Par value. Bonds principal value of face value. Coupon. Annual percent of par fixed or floating. Divide by periodicity to get periodic rate. Currency. Single, dual currency option. Indenture. Affirmative and negative covenants. Price. Yield. Coupon relationships. Bond prices and yields are inversely related. Increase in yield decreases price and decrease in yield increases price. Coupon, yield a discount to par value. Coupon, yield a premium to par value. Constant yield price trajectory of price approaches. Par as bond nears maturity from amortization of discounts and premiums. Capital gains and losses are calculated relative to this trajectory. Cash flow structures. Bullet all principal repaid at maturity. Fully amortizing at equal periodic payments include both interest and principal. Partially amortizing of periodic payments include interest and principal. Balloon payment at maturity. Repays remaining principal. Sinking fund as schedule for early redemption. Floating rated coupon payments based on reference rate plus margin. Bond pricing. There are two equivalent ways to price a bond. Constant discount rate applied to all cash flows. A DIMA to find PV. This is a bond's flat price. It does not include accrued interest. Discount each cash flow using appropriate spot rate for each. This is a bond's no arbitrage price. Full price includes accrued interest. Government bonds use actual day counts of corporate bonds use 3360 method.